Hi guys, thanks for tuning into another episode of Nuggets News, or our monthly housing and economy update with our friend Martin North. And hope you had a good Christmas and news and everything, Martin. And you want to give us some 2025 predictions today?
Yes, I had a pretty good time, thank you, and Happy New Year to you and to all our viewers and followers. Great to start 2025. And I thought rather than just look back, we might also have a little bit of a sense of some of the things that are likely to happen this year. This is going to be a big year. If you think about 2024, nearly half of the world had elections. I think it was something like that. And it's interesting how quite often the more right wing rather than the left wing got in. Also, what's tended to happen is that those who were in power through COVID and beyond got chucked out. We saw that in Canada this last week. So I think 2025 is going to be interesting. I will also say that we've had some snow here in the UK. So my first shot actually is just my back garden. Not a massive amount of snow, but enough to put all the traffic off and all sorts of things. We can't cope with snow in the UK. So it was a bit of a chilly time, but it was quite nice over Christmas, so it wasn't so cold then. The dogs, of course, love it.
I can picture you out there, Martin, with a nice cup of tea.
Exactly right. And the dogs loved it. So they love gambling in the snow. Of course, they're probably not used to it. So it's pretty good. Yeah. Anyway, in terms of trends to watch, I thought what we would do is let's just put up 5 or 6 key themes and then go through them because they're all sort of connected. But I think we should say to the markets first. So I think we're going to find that markets will be highly volatile over this year. Last year was pretty volatile. This year, I think more so. I think Bitcoin will continue to go up to the right. For all sorts of reasons. I think that the strong US dollar is going to have profound consequences. It could actually impact interest rates, economies around the world. And of course, with Trump coming in, there are Trump policies like the US tariffs. That's likely to be inflationary, and that's going to have a significant impact on what happens to interest rates as well. Home prices in Australia probably will continue to ease over the next little while because the Australian economy is pretty weak, much weaker than the US economy. And the next election, which of course will have to be by May in Australia, will be fought on housing because that is now probably the number one issue for many people. So it's going to be really, really interesting to see how all these things turn out. And so if we sort of think about the first one, which the markets will continue to be volatile, I think we can start by looking, for example, at the 2-year rate in the US. This is the bond rate. It's higher. Bond rates are actually climbing. They've been climbing since the sort of middle of November onwards. And if you look at the UK, the long-term bond rate there is higher than it's been since the 1990s. In Australia, they're very high. So we're going to find that this is going to be a very significant set of pressures because in theory, if inflation is coming down, bond rates should be coming down, but they're not. They're going up. And just the other factor there to sort of think about it from a volatility perspective, if you look at the next slide, you can see there that whilst the markets are up significantly, actually it's the Magnificent Seven. So if you strip out the Magnificent Seven, even the S&P 500 is up a bit, but not as much. And of course, in other countries, the markets have not performed anything like as strong as the US. So the US is still the place to be, but I think lots of volatility ahead.
Yeah, and I think that chart with the big tech companies is probably a broader theme of what we saw last year and what we're going to continue to see in terms of decentralization of power. So obviously crypto itself had a pretty good run in Bitcoin, but don't forget, I think the decentralization of media took a huge step in the last few months. Not everyone loves Elon Musk, but either way, Twitter has got the least censorship of all these platforms now, and it's number one in 140 countries or whatever. Just today, Facebook announced that they're rolling back. Apparently, they employed 40,000 fact checkers, and they're going to scrap that fact checking. So, whether or not YouTube also rolls back its censorship, let's see, Martin. But I think it's a positive step, and in all industries, we're hopefully trying to get away from that centralization of power and bringing transparency and trust and all that to all different industries.
Well, I think it's probably good news in terms of the idea that there should not be just a narrow path of truth that governments try and control directly or indirectly, and the large social media companies very much drag the line. If you think of if you think of Facebook and Instagram, he actually said, well, it was after the 2016 election, we started putting in these checkers, except the checkers now are proved to be as biased as everybody else. Surprise, surprise. Yes. So in a way, let 1,000 flowers bloom. But of course, we have to be a little bit robust because some of the stuff that we will see won't be true. And therefore, we need to be very sensitive, I think, to what we hear and see and, be skeptical about things. But on the other hand, I think it is good news that the top-down, thou shalt think this and you can't think that at all, is perhaps going away a little bit. I do think, though, this could have profound impacts also on the markets, going back to the volatility question. I do expect news will come through, and that could actually swing markets quite violently. And sometimes the news may not be completely true, so that's something else to bear in mind. It's interesting that Trump is saying things like, well, Greenland looks pretty interesting, and maybe the Panama Canal, I've got strategic interest in those areas. So who knows what's going to play out here. But generally, I think less censorship and less control is good, but it also requires us to be adults to be able to separate sheep from goats and not swallow everything that we're fed.
Absolutely. Critical independent thought is key. So let's push on. So Bitcoin. And Martin, I guess before we get into this, if you had said to you a few years ago your thoughts on Bitcoin, I think this is a sign of the times. And well done to you for keeping an open mind. But I think people have come around and they've learnt more about it, and it's proved itself now over many years. So, yeah, what are your thoughts on Bitcoin?
Yeah, the Bitcoin story is clearly evolving. And when Trump says he wants the US to be the center of gravity for Bitcoin, when you actually see large financial companies now taking bets on Bitcoin, when AMP in Australia says they're going to actually start investing in Bitcoin, a fund manager, you got to sort of take this stuff seriously. And I think we always said, and I remember some of our earlier shows, we always said that this was very, very early in the foothills of what Bitcoin could do. And with everything else around the world and with the current financial system creaking at the seams, with the amount of debt and deficit continuing to rise, Trump's going to put another $5 trillion probably on over the next little while. Now, there might be some cost savings coming out from Elon, but who knows? So people are beginning to question whether the existing financial system works for ordinary people. And to an extent, the Bitcoin story is still an alternative story, although, of course, the two worlds of old world, new world finance are beginning to sort of collide quite significantly. Look at the spot ETFs and the way that they've played out. But it's interesting, if you look at the chart that I sent, there was just an interesting journey, and it really tells the story from 2018 all the way through, right? And you can see we're at up over 100,000, dropped back, then went higher again. But you can see that the evolution of this. But I do think the political landscape in the US has changed. And I do think that that's going to have a profound impact on the trajectory of Bitcoin. It's going to go up to the right. It's probably not going to be linear. And of course, as a result of that, if you look at the overall capitalization of crypto, you can see that it's up to nearly 4 trillion again now. Of course, dropped back quite a lot. And interestingly, if you look at the next slide, you can see there that Bitcoin's about 53% of total dominance at the moment. So all of those things are quite significant. And then the final point just on Bitcoin, the ETF, the spot ETFs, continues to grow. Interestingly, you can see there that Grayscale lost. Other people won. And not surprisingly, given what's going on. But the point is, there's a story now a bit around Bitcoin, which is becoming a little more mainstream, but it also, to my mind, casts a very important spotlight on the deficiencies of the current financial system, which effectively supports a few people, but not the majority. And, whilst some people are making a mozza at the moment, a lot of people aren't.
Yeah, and just on that slide, for those that aren't familiar, Grayscale was not technically an ETF, and they charged a lot higher fees, so people withdrew out of that and went to these others. But the big one there is BlackRock, and as you say, going from that old world of cypherpunks and the people that were very anti-establishment initially to now BlackRock, who just have so much control and power over the world and influence. Do we really want them buying up the majority of Bitcoin? So this is another battle that I think will be in the headlines at some point again in the future.
I think that's right. And like I said, it's the collision of the old world and new world. And what we're finding is that the old financial players, the big muscly players, are using precisely the same strategies now in the Bitcoin context, right? They're charging, if you in an ETF, they're charging fees for being in the ETF. They're buying up a lot of Bitcoin and trying to get control. And of course, their influence on politics and also therefore the legislative agenda around Bitcoin is going to be quite strong too. So you can't unscramble these two things. It's not as though Bitcoin is completely other. It's now collided with the mainstream. And the really interesting question for me is to whether, in fact, central bank digital currencies will continue to be advocated by the Federal Reserve and others, or will they actually now capitulate and say, actually, maybe Bitcoin is a more significant factor. Maybe if Trump actually starts putting US treasury assets into Bitcoin, that could change the world too. I don't know. I just think it's a really interesting time. 2025 will be fascinating to watch. But I think the net of all of this is that you can't write Bitcoin off and it'll be up to the right. And the question is, how high?
Fantastic. Great to hear it, Martin. So next up, we've got strong US dollar and Trump policies.
Yeah, I just want to underscore this again because, we've spoken before about the power of the US dollar and the fact that, like it or not, the US dollar is the coin of international trade. What's happened over the last 2 or 3 years is that more and more of global investment dollars are flowing into the US because it's the best dirty shirt. As a result of that, we're seeing the exchange rate continuing to work against, for example, Australia and other places too. And as a result of that, if you look at the Aussie dollar, we're at 62 and a bit. That's really bad, and it could well drop even more. That puts huge pressures on our own economy, as we'll see in a second. But the strong US dollar also has pressure on China, and that's before Trump gets started with some of the tariffs that he's talking about. Who knows precisely the trajectory of that, and some of the other things that he's also talking about too in terms of tax cuts. Now, some of the Trump strategies will be inflationary, and maybe not surprising, therefore, that the dollar index is very, very strong now. It's up at around 108. But the consequence of this for other economies is pretty profound and pretty difficult. Now, how this is going to play out, what is BRICS going to do? I don't know. BRICS is quite a large proportion of the global economy. They're sort of talking about backing gold rather than the US dollar. That could be an interesting and important factor. It looks as though some Chinese debt is being sold. The US treasuries they held is being sold now, and other things going on. The China economy is quite weak, and they're talking about more government support there and trying to get consumers to consume. But for me, this exchange rate story is hugely, hugely important, especially for Australia, because frankly, the point to underscore here is that if you go to the sort of the slide, I made a show called The Low Road for the Aussie Has Real Consequences for You. And this is the point, that if the exchange rate sits where it is, we are going to import inflation. Oil, purchased in US dollars, is going to be more expensive. And whilst there are good news for people coming to Australia for tourist perspective, it's not universally a powerfully strong story. And in fact, there was an article that said that the dollar's dive could delay the RBA rate cuts, particularly if it drops below 60 US cents. And basically, there's little evidence that it's not going to go that way. It could impact petrol prices, as that next article shows, and the continued risk of the dollar, and it could halt the first rate cut. Now, who knows? If it gets to 55 US, as this particular article says, will they have to intervene? Will the RBA actually have to effectively support the dollar? They don't want to do that, of course, because that is a sign of weakness if they do for the Australian economy. And then, of course, we had the inflation number today, which was the monthly inflation number, which was contradictory insofar that the headline rate was up, but the underlying, the true mean, was a bit down. Only monthly numbers. There's another one to come before we get the rate cut decision in February. Quite a few people are calling for significant rate cuts from February onwards in Australia. But if inflation is going to remain sticky because of the low US dollar exchange rate to Aussie, it's going to be much harder for the RBA to move. So to my mind, this is not just a US question. It's a really, really important for the Australian economy. And unfortunately, it's looking as though the rates will be higher for longer. Even if they cut slightly, their rate cut path is much more limited now. And of course, in the US, the Federal Reserve has turned turtle and said, well, we may not be cutting much at all. In fact, some market observers in the US are only pricing in one rate cut through 2025 now because of Trump and because of the strong dollar. So interesting times there as well.
And just on the Aussie dollar, I might share some thoughts on the housing prices when we get to that. But obviously, that's good for your Bitcoin price and for your gold price and everything. You know, it's going to hurt you at the bowser with oil prices going up, but it can make a lot of difference if the Aussie dollar drops below 60 cents there. And was it the COVID low, about 55 cents as well, I think, off the top of my head. But we're in pretty uncharted long-term territory after that.
Yeah, and the point to make is I don't see a way this is going to turn around anytime soon, because China's ability to buy more of our resources, of course, you know, we're an export-led economy in Australia, is quite limited now. Their capacity to do what they want to do is going to be trimmed by what Trump does with regard to tariffs. And, you know, the Chinese economy is pretty weak. And it's also worth highlighting that a lot of international investors regard Australia as a proxy for investing in China. So if China is seen as too risky, well, investing in Australia gives you exposure to China indirectly. And the reverse is also true. If China's going off the boil and Australia's going off the boil, then maybe people won't want to invest in Australia, and that's going to put significant pressure. And of course, you know, the MyEFO that came out just before Christmas spoke about the risks to a lower dollar in terms of the tax take and the pressure on the debt and deficit. Debt and deficit in Australia is going to rise. That's going to put more pressure on what the government can do. And of course, at the moment, if you stripped out government support for households and other things going on, we'd have a real recession, not just a per capita recession. So the Australian government has, I think, muffed it too. So wherever you look, there are a few questions to be asked. Yeah, so just on the way through, just mention one thing. The Federal reserves are down. So one of the little observations here is that the ability for the Federal Reserve to support the US economy if it needed to it is looking a bit dodgy now. And I've said before that we should be watching what the Treasury does, not what the Fed does, because the Treasury is pumping 5 trillion. Now that debt is going to have a significant impact on Australia too, because of course, if in fact Australia needs to issue more bonds to be able to actually support the Australian economy, they're going to have higher prices. That's going to put high pressure on the debt markets, which means the mortgage rates probably not going to come down in Australia.
Yes. Okay. So next up, home prices in Australia and how the election will affect it.
Now, we are in the situation where already, if you look at what's happening, house prices are likely to continue to ease. The latest from CoreLogic showed that, in fact, across Australia, there's a very small 0.1% move in Australia. But within those, some markets are moving significantly differently. So, for example, in areas, some regional areas, they moved up quite significantly over the past month, like in regional WA and South Australia. Whereas if you look at places like Canberra or Hobart or Melbourne or Sydney, there was a slide down. And the point, of course, here is that this high-level analysis doesn't tell you very much, but I made a show the other day talking about where property is falling and rising and why. And the story is this, that there are areas where prices are still going up, particularly in the West, but there are also areas where prices are going down. And what we're seeing is that more expensive houses are dropping, particularly in Sydney and Melbourne, whereas some of the cheaper stuff is still rising. People still want to buy in. And in fact, the next chart just gives you a little bit of that, which is showing that there are pricey suburbs feeling the pinch. And also units are dropping in some areas too because of high supply and lack of demand. A lot of property investors selling out. And, the headline was pretty significant when it said house prices fall for the first time in nearly 2 years. Okay, let's not overreact to that. But nevertheless, if you look at it carefully, the seeds, I think, are there for more price falls. And in fact, interestingly, if you look at the next slide, you'll see there that the market's commentators that they always turn to, quite a few of them were saying, oh, don't worry, prices will probably be up a little bit over the year. But if you read it carefully, they're a bit hedging their bets and saying, well, it depends on interest rates and other things. What's happening to migration? Migration's being turned down a little bit too, although I think migration probably is going to be less significantly down than many people were claiming. And just to give you a bit of a sense, over the last few years, we've had 3 million new people coming into Australia, 3 million. So no surprise then that there's a demand support for prices. But, the bottom line is this. If you look at my next slide, house prices versus capacity to pay, it is more and more difficult for people to be able to actually get somewhere to live now because their capacity to pay has been dropped dramatically because of the high interest rates, where this is where we were. Home prices have moved ahead. That's got to come back. And in fact, if you look at this particular bit of research, there was a survey called the Big Youth Survey. And the annual Big Youth Survey said that a quarter were really perhaps questioning whether they would be able to buy. And quite a few of them, overall, more than a third believe that they would for the rent for the rest of their life, which is up from a quarter in 2023. And as house prices increase, so do the amount of young people who have given up on the dream of owning, was a conclusion from the survey. And that's a really important point. This is serious. This is really serious for people. And if you want to see how serious it is, Westpac's data showed that compared with a few years ago, back in 2018, a greater proportion of people who are borrowing now have high incomes. So basically, getting credit for mortgage is now, open to wealthy people, but not ordinary people. And this is massive. Yeah. This is huge because it means that less people are going to be able to get into the market. If you put all that together, I think home prices are a little bit on the way down. And in fact, there was a bit of research that came out that showed that if you look at the borrowing capacity in Sydney and Melbourne, that has really dropped. Whereas, of course, the need, in other words, what you would need to borrow to be able to buy has gone up because of prices. So it's a real mess. Even renters, I know that some people are saying it's good news for renters. That's another slide there saying, well, maybe the rise in rental prices will be rising more slowly. Although the latest CPI was not very helpful there. It still shows that even after government support, we're still at 6% annualized rental growth. But the real takeout from this was this little thing at the end of this article, which said all sides of politics are probably going to be bending over backwards to demonstrate a platform aimed at delivering more housing supply. That was from Tim Lawless at CoreLogic. Dead on. Expect to see housing and the next election intrinsically interlinked, because this is now the biggest issue, I think, for many, many people. And did you see Claire O'Neill recently on one of the radio programs, basically, belled the cat, saying, well, we don't want to see house prices fall. We want to, unless you actually see a change in house prices, a different trajectory, then this is going to get more and more uncomfortable. And maybe not surprising then that the consumer confidence is pretty low at the moment. So wherever you look.
I was going to say it's consumer confidence, and it's important to talk about how much this debt-based monetary system we have impacts mental health. And you probably don't notice it if people can get by fairly easily, but we're really seeing it now, and that impacts and gets the morale of a country and communities and that type of thing in young people. They can't go out and do cultural other things they would normally want to spend money on. So those may be an aspect that doesn't get talked about a lot, but I do wonder if house prices are going to soften if the Aussie dollar falls, and they're going to talk about building more houses always, but I just don't know if they're going to get that through even in an election year. Like the rubber hitting the road is still going to take a couple of years no matter what you do. So I still see a scenario where maybe houses can remain pretty strong, and they're probably going to say they're going to pull back immigration, and they're not. Like, it's just wait and see what they actually do rather than what they say would be my opinion there.
Well, you've touched on one of my such subjects, and you'll see this thing coming through this year: announceables. Right, governments want to say they're doing things. Right, we'll build 1.25 million homes over 5 years. We will support people getting into the housing market, etc. But look to see what they actually do. We need to cut migration. We'll look to see what they actually do, because quite often what happens is there's a gap between what they say they're going to do and what they actually do. There's this old phrase from the banking sector: words and figures differ, right? So, on the old checks, you see the words saying one thing, but the numbers saying something different. And words and figures differ. It's the biggest issue we've got in politics at the moment. Actually, the level of trust in politicians around the world is pretty low. In Australia, it's through the floor at the moment. And in fact, the latest results I saw from a survey showed that, in fact, the opposition was leading the incumbents there. But both sides of politics are playing politics with housing, and expect to be at front and centre of the next election. I also highlight one other thing. I do want to come back to the SME sector, and there was a piece of research that came out to show that the ASIC said that the insolvencies were continuing to climb in the construction sector. That's a big issue, both for the economy, but also for housing supply. And interestingly, the ATO was told to go easy on SME tax debt, which I think is pretty amazing. I mean, if you go back 2 or 3 years through COVID, the ATO deliberately pulled back, and some SMEs were able to get by, and then they started bearing down quite significantly. And now we're seeing that reversing quite powerfully now. So a lot of SMEs were being forced out because of what the ATO was doing. Of course, you have to pay the ATO when they say, "Oh, you owe us." So they've been told to go a bit easy now. So the government's sort of poking around trying to solve this, but the fundamentals are all over the place. And I just wanted to share two final perspectives to give you a sort of a grounding on this. The first one was this: there was an article showing just how stupid the current activity is around heritage listings. So there was this article called Ridiculosaurus, the wacky heritage listings putting laws in the spotlight. So road gutters, a horse trough, toilet block are some of the most unusual sites to be granted heritage protection. New South Wales, as local councils prepare to list dozens more, including inner city nightclub, a brutalist Northern Beaches office block, and a 1950s housing tower. Now, some of this, I think, is to try and actually counter you've got to build up, if you've got these protected issues. That's a really important point. And then the other point, you were talking about mental health. Well, here's just another, as a result of all the pressure on households and as the result of particularly the high mortgage rates, people are trying to trade off medical treatment versus affordability for somewhere to live. And this is from figures from the Cancer Council of Victoria. And the point is that there are huge and profound consequences for ordinary people because of the bad policy we've had over 30 years in Australia through housing and because of some of these international pressures. And so we should be thinking about the social consequences too, as you said earlier on, mental health, things like that. We should be thinking about the intergenerational unfairness that's going on at the moment. But also, even those who are, in the older stages of life are struggling just to get by as well. So we found, I think, that the current philosophical basis for the way our economy works is badly broken, but unfortunately neither side of politics has the guts to stand up and say we need to try something different. We're going to find the same rinse and repeat from both sides of politics through this year, and therefore I don't think that we're going to see necessarily a change of trajectory, unfortunately, which means ordinary households are going to be caught in the crossfire through 2025.
I guess my final thoughts would be, I do think this is going to be an incredible year and we're going to see huge changes, more so than ever. People are questioning, you've got RFK in there talking about completely reforming healthcare and, everything from media to politics. I think we're getting this army of independent researchers and people choosing different channels where they're consuming their content from. I really think the world we're already seeing it in the past few weeks even. It feels like we're accelerating towards some great change, and let's hope it's for the good and humanity's in a lot better place this year, Martin.
Yeah, well, I think that's right. And my final thought is this: you can't rely on government to get you out of the hole, right? So there's still a lot of people who think, the government has our back, that they won't allow bad things to happen. The truth is that the only people who really are interested in your future are you. And therefore, the decisions that you take as an individual and as a family are really, really profound and important. So it's really important to get informed about what's going on and not just swallow those high-level stories we discussed at the top of the show. Everything's fine, folks, don't worry. It's important to understand what's really going on and then make good decisions based on good information. So don't just rely on stories that really would like to be able to paint over the cracks. There are some important cracks, but it's important to understand why those cracks are there and therefore make some decisions that perhaps will protect you and your families and don't just rely on big government to solve it, because they won't.
Fantastic. Well, hope you guys have enjoyed that one. Let us know your predictions down below. And as always, links to all Martin's socials and mine down below as well. So thanks so much, Martin. Cheers.
See you. Take care, guys.